Hi, and a very good evening to all our mentorship traders. 11th of June 2021, 9 p.m. Indian Standard Time, Friday evening. We're going to talk about the markets and then we will move ahead with the medium to long term possibilities amongst the stocks. So we have 4 consecutive positive weeks. I have the Nifty futures weekly chart in front of me, a new life high. Congratulations on that. And the index is holding onto its highs pretty well. So far, so good. Let me first show you a bit of the monthly charts. It's important that we take a look at the long-term charts once in a while. I'm going to take this. Yes. So the index is essentially dealing with some levels which come in from long-term channels. This we can consider as an exaggeration, which was the COVID-19 first sharp sell-off that we saw in the first 3 months of year 2020. Nevertheless, the zone of around 16K all the way towards 16,700, this is the zone where these two lines, these two channel borders on the upside confluences. So we'll keep this in mind. Daily chart, we had a gap up, after which we did see some bit of short-term intraday volatility, and we closed as a spinning top, not exactly a doji, but a spinning top. Divergence is very evident. If you turn it into a line chart, you can clearly see the price RSI divergence, which can lead to a bit of consolidation or correction. Interestingly, the 125-minute charts, which I've been focusing on for the last few days, closely did show this rising wedge, which could have led to a correction, but it will be unfair to call this a correction. It was just a short-term dip. So this rising wedge is now negated. It's not there anymore because if you turn it into a closing price, the market has moved above that. So this rising wedge is gone. Whatever the rising wedge could have done, I'm sorry, could not deliver. But this divergence, this intermediate divergence between price rising up and RSI not managing to break its previous highs, stays as a short-term immediate concern. It would have been good if the RSI had taken above this line and probably gone up here. Then we could have had a very nice sync of price and momentum. But that's not the case as of now. We'll need to see what's in store for us next week. So the fact that we have a price momentum divergence still intact, it'll be prudent for us to be a little cautious, careful. Now, I've been talking about being careful, cautious over the last week, so primarily because of the fact of this wedge and the divergence. Interesting level to watch for from a very short-term perspective is today's low, which is 15,760. Why do I say so? Well, this gap up opening that we had today, after that there was no follow-through buying. There was a little bit of intraday volatility, but lack of follow-through buying. So the main question mark comes over here: is this going to be an exhaustion or whether going to be a runaway? For exhaustion, once this low is broken, it's a signal that yes, it's definitely an exhaustion. And once 2-day lows are broken, that is Thursday's low, it is definitely time for a reversal. On the other hand, if the index finds momentum and picks up above today's high, then the going is good, the trend is strong, the momentum is intact. See, when the markets are in a stage of an all-time high, then it's very difficult to predict the top. It's very difficult to pick up the top because the overhead resistances are not there anymore. And it's like a khula sand, So it just keep on extending up, and it's very difficult to pick up. So as traders, what we can do at best is look for such signals and signs of caution. And one of these signals and signs may lead us to a correction, which we will probably get saved from. The trend stays positive. Moving averages are beautifully, sloped on the upside. I had a couple of levels that I was working on with 15,500 and 16,500. 16,500 is very much possible, but may not be immediate, but eventual. Going forward next week, keep a close watch at Friday's low, today's low, which is 760, and Thursday's low, which is 650. So 750, 650, these are the two levels that you can keep in mind. Market at an all-time high, but the most important index, which adds up to a lot of weightage, the Bank Nifty, is around 6-7% off its all-time high. Now, I'm of the belief that if the Bank Nifty attempts to do a catch-up game with the Nifty, or in other words, the Bank Nifty tries to find itself back to an all-time high, it needs to gain around 6.5% from the current price. I have a target for the Bank Nifty close to that 36,500, where beautiful resistances stay. We can see very clearly in the month of March and late Feb how 36,500 was a wonderful level of resistance. So that's where a Fibonacci target confluences. So the overall bullish possibility of the Nifty extending another 1,000 points lies to a lot of extent in the hands of this index. If this gains around 6-7% over the next couple of months, then yes, 16,500 will not be a problem. But before that, in the Nifty, I expect around a 400-500 point correction. We'll see when it happens. But coming back to this Bank Nifty chart, trend is fine. Momentum is kind of staggered a little bit. It's not running away, it's not rushing away, because it's a mixed space. The private sector banks are slow, the public sector led. Now it's time for the private sector to pick up. So it's kind of jumbled up. We've got a decoy bar under the mentorship program. We define this as a decoy bar. So next week, early next week, that is Monday, Tuesday, if the index has to extend, if the Nifty has to extend further up and the Bank Nifty to follow suit, then today's high for the Bank Nifty, 35,474. So let's say 35,480. Let's say 35,500 is an important level. It needs to take it out and stay above that. Then you have a runaway market, or else the chances are not that great from the Bank Nifty. We did see a good amount of support coming in from metals. Extremely strong sector. Stocks like SAIL and Tata Steel inched up really well, and it seems like this is going yet again for another new high. IT performed really well. IT finally has managed to break away from that range. Yes, this range that we had drawn a few weeks back, and I think finally we've got a breakout. Very important would be that it does not slip behind. Smaller stocks like Mindtree, Coforge, these guys have done really well. Now the bigger, larger heavyweights like TCS, Infosys is picking up, and going forward, it seems like it should do well. The reason I've zoomed into this chart closely is a close look should be at 2-week lows, 2-week back lows, which is 26,700, 26,737. This should hold. If this breaks, then this might land up being a breakout failure. So IT can perform. Pharma has picked up decently, no problem. There's no divergences, slow and steady. Sun Pharma is on the verge of a nice breakout. Cipla has also gained well. DV's, Dr. Reddy's holding pretty well. Energy, we saw the movement coming in from OMCs. Reliance Industries played a very good role. ONGC also doing pretty well. So this space is also performing pretty good. Nice sequence of higher highs, higher lows. It comes down close to this moving average zone and then bounces back. So beautiful price behavior. It's just that most of these sectors are up. Let's say, for example, if you take the energy, it's up for 7 consecutive weeks. 7 consecutive weeks is not a common phenomenon for the Nifty energy. In fact, whatever you look at in this chart, I'm looking at 2018 to the current price. We've never seen 7 consecutive positive weeks. So yes, due for maybe a short-term consolidation. This is the daily chart where you can see the candles have gone smaller. So yes, we can expect this space to slow down. This is the primary reason why I say that if energy IT kind of slows down because they have given a breakout, the Bank Nifty needs to pick up, or else it will be difficult for the index to sustain. Auto, no complaints, it's holding well. This is the daily chart. This is the weekly chart, which is facing a bit of stiff resistance from an old level But the way Maruti has moved, M&M is on the verge of a breakout. Hero MotoCo and Bajaj Auto amongst the two-wheelers are likely to give us a bounce back next week. I think auto can play a small role if the index holds on the upside. This is a big if, by the way. All these possibilities from the sectoral stocks can only play out if and only if the Nifty holds to its grounds, or else at this juncture where Nifty stands, if it comes down, then it will take most of these sectors down with itself. FMCG, sad in the sense that stocks like Hindustan Unilever gives a strong move, then it kind of fizzles down. ITC is got some kind of a magnetic attraction towards the 200 level. However, if you look at the weekly chart of Nifty FMCG, it's given us a breakout. It's moved about that 34,900 mark pretty well. I've been calling for some kind of a performance coming in from the consumption and the FMCG space, but not that great performance. It'll be interesting to take a look at Hindustan Unilever, especially if you take a look at the shorter time frames like these. Okay, this was a symmetrical triangle breakout which came on the downside but never followed through. Now, this is a 125-minute time frame, and what I want to show is since mid-April, it attempted once, twice, thrice, and this is the fourth time. 4 times it has attempted a trend reversal on the upside. First time it failed miserably. Second time it managed to hold on to something, at least gave some swing move, but then failed miserably with gap downs. This was not even a proper trend reversal. This was just an attempt. And this time we have a reversal. Will it follow suit or not? The fourth attempt. It's been quite some time that the index has underperformed. And if this works out, if we have a move above previous swing highs, this is close to 2390. Then Hindustan Unilever can be an important stock to watch for, but it's an underperformer, so it needs to play its part. If you closely look at last 2 days sessions, both the highs are at more or less the same level, 2387.9, 2388. So 2388, 2390 breakout for Hindustan Unilever is an important point. Jubilant Food is doing pretty good, no complaints. Tata Consumer Products is also a beautiful trending counter. What can we ask for? But ITC again stuck. Similar story. If you see for the last few months, couple of times it has tried to reverse the trend on the upside. It has failed. I keep on dragging this zone of 200 all the way to the right every week, and this is the very strong support zone. But my eyes, I think next week will be completely on Hindustan Unilever if the FMCG has to play any part. Now I'll quickly sum it up by talking a little bit about private sector banks. Private sector banks, if the banks have to pick up, private sector banks have to play a role. HDFC Bank, number one. If you can see, it has led us to a trend reversal. This is a first correction after the trend reversal. Couple of small candles. We have a decoy bar. So there's a big if, as I said, that if index holds itself well and if the bank Nifty takes out today's high, then all eyes on HDFC Bank, Axis Bank, ICICI Bank, again a decoy bar, and Kotak Bank. Kotak had a freak trade in today's high, which was close to 1880. This was a freak trade just at the beginning, so we have to discount that level. But overall, these 4 counters needs to play a role for the bank Nifty as well as the Nifty if we are looking at the Nifty continuing for the 5th consecutive positive week on the upside. Or else if it slips below today's low and further below Thursday's low, yesterday's low, then I would suggest just hold yourself back, slow down your gear and wait for a deeper correction. All right. Okay, so that's the take on the market sectors and few selected stocks. Now, as always, let's talk about your picks from a medium to long-term perspective.